Good afternoon. This is Keith Brown in Moultrie, Georgia, with some cash commentary for the commodities world today. Certainly pretty much a mixed bag today in a lot of areas. Let's get right to it. Cotton today surprisingly held its own, I suppose, by the end of the day. We only finished less than 20 ticks lower, this after being down a couple of hundred again, or 150 or so. Market's really struggling up here. I think a word to keep in mind, a phrase to keep in mind is fiscal cliff. That is to say, at the end of this year, the Bush tax cuts will go away. There'll be automatic massive cuts to the U.S. budget. They call that sequestration, and that could put us right back into a recession if we're not already in one. Today, we saw weekly jobless claims were up, and of course, if you've just lost your job, you're more apt to go to the grocery store than the clothing store. So that's sort of a negative to me for cotton in the macro sense. Of course, Europe is melting, China is slowing, and the U.S. might be recessing. Nonetheless, cotton market's hanging up here close to 77 cents. We need to take out 77.49. That's the big key number there. So if you see that, we may push on up. But it's going to be, I think, a short-lived rally in here. Over in the grains, we had friendly news to come out of the Pro Farmer tour, yet the market was materially lower today. Corn down over 20 cents. Spot September went out at 8.08. Beans down 13 cents, 17.14. Wheat down 9 cents at 8.52. So it's a little bit spooky to us that when you get bullish news on a bull market and yet it doesn't act bullish, then maybe it's no longer bullish. Interesting, tomorrow will be 2 weeks since the report came out. That high in Dees corn that day was 8.49. We've not really challenged that per se. We've been back to 8.40, and of course now we are substantially below that number, and it just makes us think that although the grain markets are still in a bull market in our estimation, nonetheless, we could get a retreat in here. Dees corn went out around 8.14, down about 20 cents. That's a far cry from that 8.49 area, and I don't know what's going to take us back up there except we really need a new event for the grain markets. That is to say, it's no secret we're in a drought. Everybody knows that. We just need something like to happen in South America, or some new demand pop up, or some new event that's bullish that could get the market recalculating to the upside. Because right now, people that are along the market are starting to take their profits. So obviously, the grain markets have become more of a psychological battle and much less of a, shall we say, a supply-demand battle. We've seen some demand destruction, so that's no secret either. And maybe as these demand people pull in their buys, we may see this market sink a little lower. Fuel today slightly up, because the dollar was slightly down. But nonetheless, if we're about to enter a recession, that fuel's getting ready to turn back down, I think. We're looking to maybe hedge that somewhere, but I'm going to let that trade on just a little bit. At any rate, if you have any questions or comments, give us a call at 1-800-910-1910. Thanks for listening.